How's it going, everyone? It is Andre Williams, and today we're going to be talking about Senseonics. You guys know how much I love this company and how bullish I am. I actually bought some stock for the 10K portfolio challenge, which I'm very excited about because I do believe in the long-term outlook. Now what I'm going to be doing in this video, we're going to be doing a technical analysis. We're also going to be going over an article that came out recently, and then we're also going to be taking a look at this short interest information, and then I'll be giving you guys my final thoughts. But in my final thought portion, I'm also going to be going over a comment of the day that I saw on Stocktwit, and I think this is great for anyone who's thinking about SENS or maybe wanting to get into a position, or maybe you might have a position already, what you need to know and what you need to be aware of and what's going on and why I do have the bullish thesis on SENS overall. So let's get into it right now. All right, so we're now on investorplace.com. I'm going to go over this article for Senseonics. You guys know we like to read articles here on a bullish perspective and also from a bearish perspective on this channel so we can make informed decisions as shareholders. So Senseonics stock will likely rise on the same trajectory as DexCom. Sense stock could rise 5 to 10 times over the next 5 years once it receives FDA approval. Senseonics is a nascent continuous glucose monitoring company that is likely to follow a similar trajectory as DexCom. As such, SENS stock is likely to move up quite a bit soon. DexCom is a much larger company whose stock has risen over 21 times in the past 10 years. It brought to market its CGM products over successive iterations during that period. As a result, SENS stock is likely to move up 5 to 10 times in the next 5 years, assuming it receives Food and Drug Administration approval for its CGM devices. Liquidity fears allayed. However, in the past month and a half, SENS stock has dropped like a rock. It fell from a peak of $5.27 on February the 16th to around $2.60 today at April the 5th. That is a heavy 50% tumble that makes it look like there's a problem with the company. But that is not the case. Recently, Senseonics released its earnings on March 4th, where it said that the company now has $187.3 million in cash on its balance sheet as of January 31st. This is up from $18.2 million at the end of 2020. Cash went up as a result of equity financings completed during the first quarter of 2021. Here's what President and CEO Tim Goodnow said during the earnings call about the company's liquidity. The existing cash and cash equivalent should be sufficient to fund the business through cash flow break even from operations and the commercial launch. This relates to its 365-day sensor designed to be calibrated only once per week called the eversense XL. The company is already collaborating with the Swiss company Essentia in marketing its 90 days and 180 days sensor throughout Europe. Last year, Senseonics burnt through about $65.5 million in negative free cash flow. Based on this cash flow statement on page 90 of its recent 10K filing, this implies that with $187 million, Senseonics now has the cash to last at least several years. In fact, analysts seem to believe that the FDA will review by early fall its most recent product, the eversense XL. However, its commercialization seems to be already on track in Europe since Senseonics is using Essentia in Europe to market its products. What this means for Senseonics. Therefore, investors can expect to see SENS stock move higher as the company rolls through these sets of catalysts. In addition, doctors are freer to schedule surgical implants of its diabetes monitoring devices. This will allow Senseonics revenue to climb out of the hole it is in. Last year, the company generated just $4.85 million in sales, down from $21.3 million in 2019. But now analysts surveyed by Seeking Alpha expect to see sales to more than double to $12.85 million in 2021. But by 2022, revenues forecasted to go up by over 6 times to $32.90 million. At a market cap of $974 million, SENS stock trades for 30 times forward revenue multiple. But consider this, one of its main competitors, DexCom, now has $35 billion market cap and trades at 15 times the 2021 forecast sales of $2.81 billion. Moreover, as pointed out above, this stock has risen over 21 times in the past 10 years, including 4.4 times in the last 5 years. DexCom, like Senseonics, also has a cloud-based diabetes monitoring sensor product. This allows the recipient to not have to use lancers to prick their fingers while they monitor their blood sugar levels. What to do with SENS stock? The average analyst either has a hold on the stock according to tipranks.com and at Yahoo Finance, or else they have an average price target of $1.69 according to Market Beat. However, I suspect these ratings are from before the company's recent earnings release where they announced their jump in liquidity. If you look at the pathway that DexCom took over its history in the past 5 to 10 years, you can see that the market will warm up to Senseonics. Look to take advantage of the recent dip on SENS stock with a view towards its potential long-term trajectory. Alright, this is what I wanted to share with you guys. I'm very bullish on SENS, and this article just reaffirms that. Kind of gives you the more bigger outlook in regards to if you're going to be holding the stock 5, 10 years and so forth. So we're going to be doing a technical analysis for Senseonics. So we're going to take a look at the overall performance on the day. So it ended up closing the day at $2.34, being down 10.34% on the day. When we take a look at the low, it hit a low of $2.30 and ended up hitting a high of $2.57. So right now what we see in front of you is literally the 3-month 1-hour chart. You want to see a bigger picture and see, hey, if it pulls back further, where it could potentially go. Now, so when we take a look, it closed at $2.34. So the next area of support to look out for, and then you can see it very clearly, and we want to see if that actually holds up, is right here at $2. Yes, you are seeing that correctly, right here at $2. If this $2 area ends up breaking, then the next level of support to be tested would be here around $1.66. See, these are just areas that you need to be aware of and you need to know. Another area here, and I'll be very curious to see how well it actually holds up, is right here around this $2.15 area, if that breaks, and then going on further to what we previously stated. So I'll be keeping an eye on these areas, and better believe I will be looking into adding, especially if it does get into that dollar range, because I do believe in the long-term potential of Senseonics. So if we take a look at some areas of resistance on the day, we definitely had some resistance here at that $2.50 level. And the good thing about it is we already seen this is also an area of support, right? There's definitely been some times where this has been an area to prove itself in regards to it bouncing off of it. So what I'd want to see for next week for as far as for a bullish trend is literally just break past this $2.50 resistance area and making that move and getting back into 260 from like what it did yesterday. Once we get out of that particular area, then we can start making some moves and start getting above our indicators and start having a bullish trend. Because as you can see, it is falling below the indicators, so that does mean two things. If you're looking for an opportunity to get into Senseonics, hey, this is a great opportunity right here because it's below the 200-day, below the 100-day, and it's also below the 21-day EMA. If you don't believe in this company and you're looking for a swing trade opportunity, you definitely need to use this in regards to risk management. You might want to be playing off a bounce, but you want to make sure it doesn't end up falling through because you want to make sure that you also minimize your losses. So just know these particular areas of support or pullbacks could be used as stop loss areas, right? So that's what I want to kind of update you guys on. But again, if you're long-term on Senseonics, I do think the current price of where it's at, even if we take a look at the RSI down here, it's literally right under 30, right on 30. So this is an opportunity right here. But again, only if you believe in this company long term, and if you believe that FDA approval will be coming out in a time where, you know what, you have a deadline for your swing trade, then hey, this could be something definitely to look into. Hope you guys found this helpful. Now, the one thing that we want to take a look at now is the short interest. So this will show us the short volume ratio. So we take a look at the short volume ratio, it's right around 26%. You already know on this channel, if it's above 21%, that just increases the likelihood of us seeing that short squeeze. As far as short shares availability, and this is of April 9th, we were at 3.3 million. And if we look at the short borrow fee rate, it is around 3.17% as of April 9th as well. And then one thing we want to take a look at, what has it been looking like for the short volume ratio as of late? So we see it currently here at 26.31 showing us from April the 8th. But if we go back further, aside from what we had here on March the 30th, where it was at 30.44, it's definitely at a high right now currently. And that's part of the reason why we ended up seeing the particular action that we've been seeing in the stock price for quite some time. So I'd love to actually see this continue to increase because I built out a position in it in the 10K challenge portfolio. And hey, if I can add in even lower before the FDA does the approval and so forth, even better. So for my final thoughts on Senseonics, even though it got beaten down inside the market, I feel like it was a great opportunity to get the stock at a great price. Can it pull back even further? Of course it can, and that's part of the reasons why we do the technical analysis, so you can see those particular areas of support and what to look out for so you're not surprised. But again, only do this if you believe in the company long term. That makes you also want to say the disclaimer. I'm not a financial advisor, and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. I also built out a position in the 10K challenge portfolio as well for SENS stock, and I'm very, very excited about that. I'm going to be splitting up positions, like I tell you guys on this channel, into 4 parts. So I took my first position, so I'm going to be taking 3 more, and that's if I end up seeing some more pullbacks, and we'll make decisions from there. And of course, I'll keep you updated. And now what we're going to be moving on to is a comment that I saw on Stocktwit. There were a lot of shareholders who were panicking about the price that they were seeing with SENS, saying, oh, this stock that, man, like, why is it doing this? Why is it going down? And then he came out with this comment and said, hey, here are some reasons why you shouldn't be worried, and that's what I'm going to go over with you guys right now. So let me pull it up on my phone. I'll put it on the screen for you guys. So here it is. Number 1, SENS is the only company holding patents on implantable CGM sensors, so they have 0 competition. And I just think, even for this first point, this is huge. The technology that they have, no one else is doing it. So the fact that how disruptive this technology is, you have to be forward looking and seeing what the prospect actually is, and it looks really good. The second point, in Europe, the 180-day device has been approved. And in the USA, the 90-day device has been approved. So the likelihood of the 180-day being approved in the US is fairly high. And especially since it's been approved already in Europe, that's also a good sign. Now for the third point, Essentia has the largest diabetes network, and they already started marketing for SEN on April the 1st. So taking this into realization just shows that how they have access into the market. So now for the fourth point, DexCom G6 stock price is approximately $365, which took them more than a decade to reach when it was $2.50. So just taking a look at the overall long-term prospect for Senseonics, it really does make you even more interested and also keeps you in the know and confident in the investment that you have. The fifth point, the 365 days is coming in a few years will bring this stock to triple digits. So what the person is saying, hey, this is Senseonics stock can easily hit the triple digit range. So we're saying at the minimum here, $100 when that 365-day device gets approved in the USA. The only way for this stock or DexCom to drop dead is if somehow scientists invent a non-invasive method to test blood glucose. This is highly unlikely. And this makes a lot of sense. Like I was telling you guys before, diabetes is something that runs in my family. And just to the fact that in order to know and get an accurate reading in regards to blood glucose, you need to prick the skin, or you need to have something that goes underneath the skin and so forth. You're not going to be able to just look at someone. Maybe that technology might come out, but we're not seeing it right now, where you could just figure that out maybe through they walking through a device or something like that. But the long story short is it just does not exist, and the likelihood of it actually coming out, no one's actually seeing that. Now for the next point that is very crucial. We need good quarter earnings from here on out to move it up. The 180-day FDA approval will take it to upper single digits. Continue improved earnings will take it to double digits, and 360 days FDA approval will take it to triple digits. So this is what I feel like is very important. When you're looking at SENS, you have to look at it as a long-term outlook. And then the last part, I was unable to get it all into in the screenshot. Retirement investment with the potential to make millions, and that is true. If you end up buying a ton of shares and SENS ends up going to $100 from here on out within the next decade, you're going to be a millionaire. But again, it depends on how many shares that you buy, of course. So that's what I wanted to kind of share with you guys. For anyone that may not have been aware, maybe you haven't seen any of my previous videos on Senseonics where I go into even more details in regards to what it's about. But that's just something to know if you are an investor or you're considering to make an investment and so forth. And as far as the prices that we're currently seeing, take advantage of those pullbacks when they do come. And if you do believe in this company, I hope you guys actually just give it some consideration. Hope you enjoyed this video. We'll talk soon.